What's up, guys? This is MJ Capital again with another quick video on sundial growers. Delisting risks explained, why the looming reverse split is necessary but not to fear it. I'll get right to my points in this video, so let's get right into it. The shareholder meeting July 21st is going to seek approval of shareholders to consolidate existing shares of a ratio anywhere from 10:1 to 25:1. Reason to comply with the Nasdaq's $1 minimum bid price. To subsequently avoid delisting. Voting no. Not an option, I'll explain. But first off, two quick points. Number one, why such a high ratio? Why not a 4:1 or even a 5:1 split? Reason, too risky. Sundial needs to leave a large room in case the macro conditions decline or the share price drops after the next earnings report. I don't think it'll happen, but just in case. And point number two, reverse splits do not affect the valuation. Price drops due to panic selling. By the end of this video, you'll understand why. Okay, so 5 major reasons why Sundial must undergo a reverse split to avoid delisting. Number 1, if Sundial gets delisted, they're going to have less access to capital. From my point of view, this is the main reason delisting to an OTC is not an option for Sundial. The change in cash and cash equivalents is big. And so Sundial has relied and will continue relying on easy access to capital, and more specifically, access to cheap capital, at least in the short term. This benefit goes away if they're delisted, and remember, cash flow positive is high on Zach's priority list for 2022. Reason number 2, Sundial would lose liquidity if they're delisted. And what exactly is liquidity? It means the extent to which Sundial can be bought and sold quickly at stable prices. Basically meaning how many buyers and sellers are out there in terms of volume. For example, in a liquid market, a seller of Sundial's stock will quickly find a buyer without having to cut the share price dramatically in order to make it more attractive for a potential buyer. Sundial gets delisted, this benefit goes away. Reason number 3, history. History shows that prices usually go down after a delisting, and companies rarely become relisted on a major exchange. Number 4, a delisting would cause Sundial to have less transparency. There's not as much financial regulation in the OTC markets, which is going to lead to less transparency. Much harder to know if the company is telling the truth about sales and profits, which is why fraud is much more prevalent in the OTC markets. And reason number 5, a delisting is going to cause Sundial to have less media coverage. So that means fewer analysts and institutional investors will be following Sundial growers. Result, individual investors like you and I will find it harder to obtain relevant information on the company. And so that sums up the 5 reasons why undergoing a reverse split to avoid a delisting is absolutely necessary. And so why might you want to buy Sundial instead of selling, as a reverse split often indicates a failed business strategy? I've listed them here for you. I'm not going to go into detail because I've already talked about them in previous videos. However, I do want to mention the potential buyback, as there has been a lot of discussion on it in social media. From my point of view, it will not happen for a while, nor should it. Buying back shares with money that has not been earned is not adding shareholder value, only causing temporary volatility for day traders. The buyback press release was all about reassuring investor confidence, which I do appreciate. In summary, to be clear, Sundial does have its fair share of risks, and macro conditions have yet to show improvement. However, my point of this video is that the reverse split is needed to avoid delisting. And more importantly, it's coming in a time of potentially a very strong earnings report and several near-term catalysts. Let me know your thoughts in the comment section below. I'd appreciate a thumbs up and to consider subscribing for future content. Have a great rest of your day. Talk to you soon.